Good morning, everyone. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar, and today we are going to revise the entire Module B because we were done with the Module B. So I thought we can have a class where we would be spending time on revising the entire Module B in a single class. Okay, everyone, if you like this particular session, then please go ahead and share it among your peers. Along with this, module B is one of the most important modules. Reason, this particular module lays down the foundation for module C as well as module D. So this particular module is something you should not think of leaving at all. Okay, so that's about the entire module B that we can quickly talk about. Then please go ahead and share this session. Along with it, please go ahead and like it as well. Let's move on and talk about it. This is the revision class. Done now? So let's begin, everyone. Here comes the first question. What does unpaid share capital refer to? What does it mean, everyone? Unpaid share capital. What do you mean by unpaid share capital? Is it the amount forfeited by the company, amount determined as unpaid for a suitable situation, amount finally determined as unpaid, or part of the called up or subscribed capital yet to be collected? But the unpaid is basically the amount which people are not going to pay. This is just the amount. Forfeiture is the drastic step that we take. Forfeiture means that we say that this particular person will not pay even a single penny. So in this case, if the person is not going to pay even a single penny, this is the time where we would scrap off his name. That means we will remove his name from the list of index of the shareholders. This forfeiture thing used to happen before the demat accounts were formed. After the demat account has been formed, there is no such issue. That means forfeiture is no more there. Then amount determined as unpaid for suitable decision. There is nothing called suitable decision, everyone. This is not correct. Amount finally determined as unpaid or part of the called up or subscribed capital yet to be collected. This is the part of the capital which is not yet collected. It would be collected but in future. So if it is yet to be collected, how can we call it unpaid? It is something which is uncalled. So in this case, this is the amount which is finally determined as unpaid. Matlab, the information mentioned as unpaid is amount finally determined as unpaid for which the management can take suitable decision. Now it is their choice whether they want to forfeit the particular share issue or whatever they want to do with it. Done. Okay, now comes the next point. What is the primary reason for equity being a natural choice and the first option to raise funds? Equity being the natural choice. But whenever we start a business, that's the first thing that people do. They always invest their own money. And isn't it better? Why to ask n number of people, sir, can you borrow me money? Or again, they will ask for collaterals. So we have to give them collaterals as well. So it's way more comfortable if we have a particular situation where we have shares issued. Okay, in this case, what are we doing? Equity shareholders are basically the true holders of the company. They are the owners of the company, because they invest their money, and they are the ones who face the maximum losses and risks as well. So when we talk about equity shareholders, they are the first choice. Debt and everything else is chosen afterwards, because debt means what? If I take a loan, that simply means I have to pay interest on it as well, and the person can also ask for additional security to prove that we are going to take care of those particular payments as well. What would be the answer? Lower cost of capital, guaranteed return on investors. Everyone, equity shareholder can never guarantee that they would be giving money, because you don't even know how much risk you're gonna face. Then higher risk of safety for lenders. higher risk for safety for lenders. In this case, what would it be? When we say the topic of higher, just a moment. Acha, theek hai. It's all sorted now. When we talk about this area, when we say the equity shareholders can never be assured that they don't have to give extra money. This is one of the truths about them. Pata hai? There is no surety, na. Is there any surety the business will run smoothly throughout the life of the business? It's impossible. Higher safety, higher level of safety for lenders enhances ability to assume inherent risk. Inherent risk is always there. You cannot remove this risk. This is the inbuilt risk. ठीक है जी. So in this case, what's gonna be the answer? Guaranteed return to the investors. This will never be the point. Higher safety for the lenders. The actual answer is actually ability to assume inherent risk. Why is this ability to assume inherent risk? These people already know that equity is a natural choice because people know that ultimately risk is something which is going to be there, and debt is something where there is no risk. There is a risk which is financial, and if anybody else is giving us money, there is always a burden we have to earn and we have to give them money first. So the financial burden from the debt point of view is a little more. Initially, you can tell equity shareholders कि we are a startup, initially we'll be giving you less. So you can initially jot down with equity, but remember, over the period of time, if you give more equity shares, it would simply mean losing more of your voting power. That's how Narayan Murthy lost his own organization. That's how people like Jim Collins, who were earlier involved in Pepsi, went on to Apple and ate up the position which Steve Jobs himself created for him. And he was the reason that Steve Jobs had to leave his own organization. There was a different point of view when Apple really went down the drain. They realized that there was only one person who could save them, and that was Steve Jobs himself. And while he was searching for different people, ultimately he ended up being the person who was taking care of the entire organization. So in this case, can we say he was also the founder, he was the promoter of the Apple? So can we say the promoter plays a very important role? Indeed. That is why these people are ready to take the risk as well. And since they are taking the risk, they have every single right for voting. Nobody else has. They have. Now, what are the components of internal accrual? Everyone, internal accrual. Everyone, what do you mean by the term internal accrual? This is the other name of reserves and surplus actually. Okay, so in this case, this is the other name of reserves and surplus. So what would it mean? Internal accruals is basically only profit and loss, profit after tax, only non-cash profits, PAT, profit after tax, non-cash profits and dividends on preference shares, or profit after tax, non-cash profits and depreciation. See, internal accrual is everyone. Let's talk about an organization there. The organization first have to pay to the preference shareholder, to the outsiders. Basically, the bank has to be paid the interest. Then the debenture holders has to be paid the interest. Then we will pay the tax to the income tax department. Salary and all comes first. So basically, all these things are already done, and then whatever we are left with, that amount, maybe meager, maybe big, whatever the amount would be, that is an acceptance that this amount will go to the shareholders. But even in the line of shareholders, who's gonna ask first? Is it the equity or the preference? The name preference itself states that these people, they want money before equity. If they want money before equity, then preference shareholders should get money before equity. So in this case, the preference shareholders are paid first, and then equity shareholders get it. So that is profit after tax and even non-cash profits and depreciation, because they're talking about internal accruals. in case they talk about only equity, then you will remove the preference portion as well. And in this case, we will treat depreciation, non-cash profits and everything after we are done with this. See, this is in the form of provisions or reserves and depreciation. Nanji, that's it about this question. Let's move on towards the next question. The next question is, why are term loans considered relatively cheaper to service compared to working capital finance? Everyone, one particular thing that I've seen, probably you would have seen it too. If you take a short-term loan, especially when we talk about the call money and when we talk about the short-term funds, the interest rate is higher and it varies every single even hour. Call money, just in terms of call money, the interest rate varies every hour even, है ना? Okay, then in this case, this is what it happens. Now, when we talk about short-term area, the interest rate is higher as compared to the rate of interest on the long-term loans, isn't it? Now, this is something that is true. So, what is it that we should deal with? Lower interest rate. Now, normally, the working capital finance is short-term. If you would have seen it, this is short-term. But when we look at the things from the longer point of view, the term loans are considered relatively cheaper because their interest rate is lower. This is because of lower interest rate, or but that is not the reason now. Shorter repayment period? No, that's not the reason too. Cyclical movements in the business fortune or medium to long term prospects. Actually, now the reason why this thing happens, that is because of cyclical movements in the business fortune. Working capital are basically something which is related to the short term area, while the term loans are related to the longer term. In the longer term, now things get settled. In the short term, it is very difficult. So that's why when we talk about it, the cyclical movements in the business fortune is the reason. Okay? Because in the long term, everything gets stabilized, right? This particular point suggests that working capital finance is costly because the rates determined on the medium to long term prospects of the project, where cyclical movements in business fortune are more or less evened out. Okay, everyone. In short term, this is going to hit you badly. What if we are talking about long term? All these things happen, but over the period of time, you will see it gets evened out. This doesn't get evened out because every shock in the short term would be bigger. But in the longer term, it feels evened out because in one or the other way, those losses can be recovered. है ना? Acha, a very important topic. This is called, what does DuPont analysis use as a measure of financial leverage? What do you mean by financial leverage? Pata hai, there are two kind of leverages. Leverages is where we need money to expand the business. Operating leverage says ki whatever way we are working, we will work on the basic level of working that we are doing. Operating leverage is basically whatever level of working we are currently at, we would like to increase at the same level. For example, if I have a specific space, I would try to utilize the same space in a better way. That is operating leverage. Financial is I get a more bigger space so that I can work properly. In this case, same scale of business, it is operating. And when we move towards the higher area, then it would be what? Then it would be when we are trying to increase it further, that is something that is financial. So in this case, they are asking about what does a DuPont analysis use as a measure of financial leverage? Debt to asset ratio, debt to equity ratio, equity multiplier, or interest coverage ratio. DuPont analysis is basically covered in controlling chapter as well. So when we talk about DuPont, debt to asset, debt to equity, or equity multiplier. In terms of financial leverage, it would be equity multiplier, everyone. So in this case, equity multiplier is a measure in which they are taking total assets upon total equity. Since we are looking at equity point of view, we are going to do total assets divided by total equity. ठीक है, that is what we talk about equity multiplier. We are just trying to find out if the total equity of the business is 10 lakhs and the total assets of the business are 40 lakhs. How much money are we making out of it? Okay, what is a limitation of accounting rate of return method, everyone? In terms of accounting rate of return, this is capital investment decisions. Now, it is a profit centric and does not consider cash flow, or it requires estimates for the entire project life. It is more uncertain than the discounted cash flow method, or it considers the time value of money. What would it be, everyone? It is profit centric? No. When we talk about accounting rate of return, this is a particular, but this is actually something which is non-discounted, and that is why it is called traditional method. Or it requires estimates for the entire project life. No, we cannot say that. The limitation, this is, the answer is to find out the limitation, the disadvantage. It requires estimates. This is true. It is more uncertain than discounted cash flow method. Again, true. But this is a characteristic, not a limitation. It considers time value of money. Actually, it doesn't. So this is a wrong statement. The accounting rate of return is just a profit centric. This is true. They're just looking at the profit. They don't care about anything else. So in this case, A is the only thing that makes sense. Everything else doesn't make sense. That doesn't relate to their accounting rate of return. Okay, the answer is A. It is profit centric and does not consider cash flow. Reasoning, it does not include time value of money. As I told you, accounting rate of return and payback period are the two methods. Accounting rate of return, that is ARR, plus payback period. These are the only two methods which do not use time value of money. Okay, these are basically called non-discounted techniques of capital budgeting. Okay, this is, oh, I'm sorry about the bad handwriting. Just a moment. Non-discounted technique of capital budgeting. ठीक है ना? Done? Now, what does equivalent annual costs represent in capital budgeting and cost analysis? Annual cost of acquiring an asset, annual cost of owning, operating and maintaining the asset over time, present value of the net cash inflows, or total net initial investment. What would be the answer, everyone? What would be the answer? Total EAC, equivalent annual costs. Actually, this is total annual cost, means the cost which we are totally incurring when we get an asset. है ना? अच्छा everyone, if I buy a car, it doesn't mean ना I just incur only one expense, that is buying the car. है ना? हाँ जी. What would it be, everyone? Annual cost. If I buy a car now, I have to go for the servicing as well as petrol expenses. Now, this is something which is separate from the car buying. My car would have costed me a good amount of money, and then I would have spent on its servicing as well as even cleaning. That is another point. That means annual cost of owning, operating as well as maintaining the asset over the life is called equivalent annual costs, everyone. ठीक है? This would be the maintenance of asset over its lifetime. अच्छा, how is security beta calculated in CAPM model? अच्छा, CAPM model is what exactly? CAPM is equal to, this is an important question. Important. because I believe such kind of questions would be asked in the examination this time as well. They asked a question from a particular formula and they asked out of its assumptions. Crazy level of questions for sure. So in this case, CAPM model says, CAPM model is basically the risk-free rate of return. That means if you do not take even a single risk, what would be the return that you'll get? Then beta is a multiplier, and then from the market rate you remove the risk-free rate of return. Dividing the risk-free rate of return by the market, dividing market returns by risk-free rate of return, dividing the covariance of security returns and the market returns by the variance of the market returns, or multiplying the covariance of security returns and the market returns by the variance. They are asking you about how to calculate this beta, everyone. Beta is calculated using the covariance of security and market. Individual security is basically connected with the market, and we try to find out their relationship. So in this case, the answer is C, everyone. Now, when we talk about this area, dividing the covariance of security returns and the market returns by the variance of the market returns. Okay? Done, everyone? So that's it for the day. Before I end my session, do you know the sale has begun? And if you haven't got to know it yet, then what are we waiting for, everyone? The sale is definitely there for a very limited period, and this is something where you can utilize this opportunity for getting the course if you're looking forward towards the course, because when you want to buy the course and at that point of time when the sale is going on, you should opt for it, because ultimately at that point of time you get the maximum benefits. Acha, since we're talking about CAIIB June 2024, open the pack. Double validity is available for a very limited period. Acha, this is the price top sale is here, that is there in the CAIIB test series, everyone. You can check it out there. This is in case of the test series. Mock and part tests are available in this area for ABM, BFM, ABFM as well as BRBL. So if you are interested, then you can buy this particular course, and what you can do is you can use the code Y541 and apply it. Acha, currently I think in this area you will get the coupon of NY 15%, or there is one more area. This is the test series now. Other than the test series, many of you would be looking forward towards the classes. I think one of the best things, if you're looking forward towards the classes and everything together now, then kindly go ahead and buy the Mahapack. When I say Mahapack, the benefit of Mahapack is you get English medium, you get bilingual. Both the entire courses are opened up. The entire optional subjects are opened up. You can learn any of those subjects and you don't have a restriction over it as well. 500 hours of live classes, 187 test series. That means it includes the entire CAIIB individual test series of each and every chapter, each and every book, everyone. See, you don't have to worry about it. In terms of ABM, 32 test series are given. ABM, BFM, the tests are given. Then these are given for individual each and every chapter or each every subject, I would say. So this is something that you should really opt for, because ultimately this is super important. Then along with this we have 258 ebooks as well as the previous videos as well. If you feel that in the current batch you want to go ahead, so what you can do is you can watch the previous batches as well. The syllabus had changed in 2023 itself, so that means it's just 1 year and you can review those particular classes as well. So if you are planning for it, then go ahead, click on the area of buy now and use the code Y541. As soon as you will apply the code of Y541, you will get it at 78% discount, everyone. So it is way better to apply this particular discount of 78%, and then get it for 7473.85. If you're interested in buying just the 4 subjects, not the elective as well as other things, because Mahapack includes the revision batches as well. You don't have to pay separately for the revision batches or the MCQ batches or anything that we come up afterwards this. There is no limit to it. Okay, then other than the Mahapack, what you can do is you can also take up our resolution batch. The resolution batch is the English medium batch. You just have to click on this area, use the code Y541. As soon as you will apply it, you can get it for 5519.77. The validity is for 6 months, good enough for your exam preparation. So if you're planning for it, then kindly check it out on our website, on our app for further